What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 19th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. So hit that like button. Today we're going to talk about the price action in the indices. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and today I didn't really have much activity. And we'll go through options order flow as well. I think the order flow is actually going to be very significant today, so we'll go through that, in detail. Before we get into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own risk parameters, your own trading plans, and last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into the price action for today. So how are you feeling today as the market was just plumbing lower? It's important to understand, how am I feeling during this price action? Was I prepared for this? All those sorts of things, because, we were talking about this for essentially the last 2 or 3 weeks. How almost every day I was saying, market's a little overextended here, The past couple days we talked about, I started taking off a lot of risk. I believe it was here and here. Or it may have been these two candles. I forget which two, but there were 2 days where I really de-risked my portfolio. And this is the reason why. Because these things happen in the market. They are completely natural. They happen all the time. So if you're looking at financial media or you're looking at Twitter, there's going to be a lot of people out there that they make it seem as though what's happening today is so abnormal, something is wrong with the market. And that's just not the case. This is how the market functions. It always stair steps higher, and then on the declines, it's a lot quicker. So usually the declines, they're shorter in duration, and, the pace is, way higher than, a steady rise up here. So where are we right now in the S&P 500? We've broken below the 20-day simple moving average, and we sliced through that in pre-market. We never even looked back once we traded below that. And we dipped into this monthly value area, and we undercut the 50-day simple moving average. And we ended up closing above the monthly value area, which is pretty good. And we also closed above that 50-day simple moving average. You can also see we undercut the monthly point of control as well. So on the one hand, not good that we lost some key technical levels, but on the other hand, hey, we regained, more than half the key technical levels that we lost by the end of the day. And I will say at this point, I don't look at this anymore and go, oh, the market's overextended. No, that's definitely not the case. In my opinion, the risk reward is a lot better now in the market. Let's look at our hourly chart. Hourly chart, you can see we had a very nice, or very horrible, descent lower in the market, and then at the very end of the day we got a really strong bounce. So we had last about hour of the trading session, sharp move higher. But when you look at this trend here within the hourly chart, the bounce really wasn't all that significant. I'll be perfectly honest, because you can see this 20-hour moving average right here. We haven't even tagged that. 50 hours up here. So I'm not really putting all that much weight into that bounce at the end of the day. I mean, I guess it's a good thing. It's always good to bounce, but, it's not like, oh my gosh, that was it. That was the bottom. Very well could have been the bottom, but I also wouldn't be surprised if we start trading inside this wick tomorrow. Let's jump over to the NASDAQ. I'm going to run through these pretty quick here. NASDAQ really trading down to just this 20-day simple moving average. It's not like we've lost, a ton of key levels. This is really just a garden variety pullback. In the NASDAQ, you can see NQ futures. It looks like they are up 0.35%. This is probably after hours. But, as measured by the Qs, we were down 0.82%. Let's go through those box scores. SPY down 1.48% for today. NASDAQ QQQ down 0.82%. IWM small caps down 1.5%, and the Dow Jones down 1.98%. And important to know, none of these indices closed on their lows for the day. So NASDAQ, yeah, really just pulling back to the 20-day. And let's look at the hourly chart here. This one also, very powerful bounce into the end of the day. This one actually closed above that 20-hour simple moving average. And the bounce did come on volume. So, maybe that will portend some strength tomorrow. Let's look at our Dow Jones. And the Dow Jones fell completely through this monthly value area. Actually traded below it, undercut the monthly value area low, and traded inside of it to close the day. So let's jump over to our VVIX. So I think this is important. VVIX, super elevated. Check this out. So in a lot of these prior volatility spikes, we hit similar levels of elevation in the VVIX. So I'll just draw this over. Yeah, it's going to be a pretty crude drawing. Not going to be like perfect. Yeah, you can see that red line there. And so in terms of a volatility spike, this is a pretty, it's not like, oh my gosh, this wasn't even a spike. This is, a pretty significant move higher. And we all know that from these volatility spikes, we get the best opportunities to get long the market. We closed well off the highs today, and almost every other volatility spike followed a similar pattern where you get a day where the VVIX just closes well off the highs, long upper wick, and that's typically towards the tail end of the volatility spike. When we saw Friday's candle, it's like, oh, who knows if we're at the tail end. This thing literally closed at the upper end of the range, literally on the high of the day. Today, when I see this makes me a lot more optimistic that the majority of this volatility spike is behind us. And I'll just pull up the VIX as well. VIX was up 21% today, and we're seeing the same thing with a long upper wick on the VIX today. So today is really the first day where, I did a lot of observation. I look at the risk reward, and I'm starting to say, man, I really like this risk reward here. This is getting a lot more enticing to me. And what's interesting is, if you're reading financial media, they're going to say like the sky is falling. If you're reading financial Twitter, a lot of people there, they'll also say the sky is falling. And points like this are where you have to tune out the noise and, just follow your own process, your own, your own trading parameters, and just execute on them. Because what's going to happen is you'll see people that are like, oh my gosh, I'm so bullish. And suddenly when the market starts moving really fast like this is when everyone's ego comes out. Everyone wants to be that person that called the bottom, or, everybody wants to say that, when the market's going down, they're in all cash, they're not losing any money. But a lot of what you're seeing, it's really just illusion. So it's important to just think about like what's the next best move you can make for yourself. Let's pull up our market breadth. This breadth here, you can see this is some nice washout breadth. Early in the session, this was at like 7% breadth on the SPY. It was at like 8% on the Qs. Like these were all like, below 15%. And that's what I like to see on a washout. Basically, none of the stocks are going up. And the breadth improved slightly throughout the trading session. And Dow Jones got zeroed out. No advancers today for the Dow. So I like that. Finviz heat map. This is a pure washout through and through. Like I said, the breadth did improve slightly throughout the day. There were a few bright spots, but nothing crazy. Nvidia, which I added to on Friday, this one was up 3.41%, so that was great. It's sometimes you try for these like test buys, and sometimes your test buys just don't work at all. I've actually had some success over the past couple days with my test buys. So that's another thing for me where for a while there, really the past couple weeks, it was like every trade I was putting on, I was just getting stopped out of. Now my win rate is starting to improve again. So to me, that's like, all right, this risk reward is definitely starting to get a bit better here. But yeah, violent moves to the downside. And it really depends how you look at this. If you're 100% invested, this to you is like, oh my gosh, like I got destroyed today. But if you are holding some sort of cash balance, this is your opportunity here. Where a lot of these stocks, they're marked down. The stock market is one of the only things in the world where once everything goes on sale, everyone runs out of the store. Those aren't my words. It's like a famous quote, but it's just so true. Where nobody wants to buy these things once they get a little bit cheaper. Sectors, pretty much every sector was red. We did have a couple of bright spots. We had solar energy up 0.58%. We had the ARC funds, which were also up on the day. So this to me is another little bit of a divergence. Let's pull up the ARC funds. Yeah, ARC finished up 0.64%, and we were testing below this monthly point of control, and we closed above it. So that to me is like, if Armageddon were coming, would that really be happening? You can see the ARC-G as well. Solar energy, and keep in mind, these all got pummeled over the last couple weeks. Solar energy definitely held that 50-day, but for the most part, it really was a bloodbath today. And then jumping over to our style factors. Style factors, worst performers, high beta, down 2.99%. And this monthly performance, it's really not good. International momentum down 2.26%. International value down big. And we had cyclicals down big as well. Minvol was looks like our best performer on the day. And then growth was a good performer as well. And so for my trades, I didn't do any trades today. I was just, kind of waiting and watching. And that's something, my goal moving forward is to have more days, of the week, of the month, of the year where I don't do any trades. Because I think there are certain days where there's a lot of edge in trading. And I think there's other days where there's really no edge. And you should just be doing nothing. And I think today may have been the first day where I think there's some nice edge in getting long the market. And the reason why, when we pull up, so we'll go to options order flow. Before we do that, we'll pull up this quote. I've been pulling this up, the past couple of trading sessions. In the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You get to see the market's cards before you bet free of charge. This is a wonderful advantage, yet few exploit it. So as we're sitting on the sidelines, being less active, now I'm starting to see that edge reappear. And what I mean by that is when we pull up, just a couple things. So let's check out, look at the CNN Fear and Greed Index. CNN Fear and Greed Index is at an 18. This is extreme fear. And this is something I always look for. Whenever the market gets to extreme fear, I post the CNN Fear and Greed Index. And keep in mind, I understand this is not a perfect indicator by any means. And there's really no such thing as a perfect indicator. But there's a lot of people out there that they go, that indicator is the worst, whatever. But it does give you a good read for sentiment. And if you use it consistently, you'll get a feel for when sentiment is better versus when it's worse. So you just have to take the indicator as it is. It's not a silver bullet. But every time I post this thing, when the market's melting down and it's in fear or extreme fear, I will always get responses that say, yeah, but it's going to go lower. Or, yeah, but that thing doesn't work. It'll always be bearish people that they won't acknowledge that, no, the sentiment is very bearish now. And that to me is always a telltale sign. Same thing, this thing will be at a 99 and you'll post it and people will be like, yeah, but it can still get to 100. It really does, in my opinion, it's a useful indicator. So if you're seeing a Fear and Greed Index, we're really depressed now. And then these option statistics for today. This is the total put to call ratio. And this gets recorded, and printed every 30 minutes. And this shows us that there was a lot of fear in the market today. This put to call ratio registered an over 1 reading multiple times throughout the session. Almost every half hour it was over 1. That tells me that investors were really loading the boat on puts. as I think about that, I'm like, is now the time for me to be loading up on puts now that the entire market's basically forced to load up on puts? No, definitely not. This is not where I want to load up on puts. This is where I want to start thinking about loading up on either common stocks or calls. But like I said, some of these test buys are working, and some of these individual names are actually working very well. Like Doc N. This is one that I put on DigitalOcean. I put this one on. I got a nice entry on this name. I got it pretty much like in this lower wick a couple of trading sessions ago. This one had a really nice day. Shopify, which I did a test buy in a couple of trading sessions ago. This one, I'm about flat on it. I think I entered it on this day right here. Yeah, Shopify had a nice day. Nvidia already went through, had a good showing as well. And DocuSign, check this out. This name is, the market's seeing a ton of carnage. This name is about to shoot off to a new high here. So I look at this and I'm like, I see some positive divergences. So we have the put to call ratio really high. We got some individual names that are really showing strength. Market's hitting oversold conditions. I definitely see, some edge that's beginning to appear. Well, let's look at our options order flow real quick, and then we'll break for the day. Options order flow, check it out. So there was a ton of options volume. SPX, you can see pretty much like an even mix of puts and calls, but we did have some, huge call orders here. These are for September, 4250 strike SPX. June of 2022, 2000 strikes. And you can see some puts as well. And then with these IWM, look how many puts are going up for IWM. While this thing is already like on the mat. As I look at this, to me there's like savvy put buying, which is, you're buying puts, maybe into strength or maybe at the beginning of a downturn. But I mean, this to me is more like the covering yourself puts. Like your job is on the line. And you're like, oh my God, I need to buy puts on the IWM now. Like I need to protect myself. And that to me, that's usually when it's like, like that might not be the best time to be buying puts. Maybe it is. Maybe we tag this 200 day. But, look at this. Like IWM put in a green candle today. So on the day where this is more IWM puts I've seen probably the entire year. And they all start buying puts on the first green candle in IWM. That is bad timing. I don't care what anyone says. That to me, even if this thing goes down like a little bit more, that was, that's not the best timing on the trade. That's really like buying puts when like you're on your back foot rather than like being aggressive and being like, oh, okay, I'm going to be proactive and buy these puts. Same thing with SPY. A lot of put buying. And you can see we had a couple chunky call orders, 400 strikes for August, 397 for August. But overwhelmingly, it's a sea of puts. And let's take a look at some flow leaders to the upside. I see Ford has some call activity. Looks like calling a put. There's not really anything there. Amazon calls going up for October. More October. July. Let's check out Amazon. And this is another tell. Let's look what Amazon did today. At one point, this stock was down maybe like 1.7%, almost 2%. And Amazon closed with a green hammer candle down only 0.67%. So, thinking about risk reward, this thing is awfully close to that 20-day. Would be very bullish if it reclaimed it. And this is the weekly chart for Amazon. Almost had its breakout. It literally did have its breakout, and then it sort of retraced it. But I look at this as well, and this is like another positive divergence. So tonight I'm going to be doing a lot of thinking. I'm going to be crafting a nice watch list for tomorrow and really building out, a plan of attack for the rest of the week, because I'm starting to see that risk reward come back into the market. That being said, that about does it for this post-market webinar. Hope you all have an awesome rest of your evening, and I will see you all tomorrow. Oh yeah, and I did no trades for today, so that's why I didn't show anything. All right, bye guys.